loaded, most certainly. Yeah, I get it loaded. Just ride the play. If you ride the play, Johnny ride the.
Okay, so today we're going to be talking about how to use supply demand, and I mean supply demand on a 1 minute time frame. Now this video is going to be pretty much a overview of a concept that I actually teach a lot of my students, but I'm gonna be breaking down to you guys also on the YouTube channel. Just, you know, it's not obviously not going to be in too much detail just because it does require a lot of information, and this video will probably be forever. So that being said, I'm gonna need you guys to do me one favor. If you are interested in the concept that we will be using for one, which is using supply demand on a 1 minute time frame, 2 minute time frame, 5 minute time frame, 15 minute time frame, to look for these great entries, I'm gonna need you guys to make sure you like this video, get it to 500 likes. If we can get it to 500 likes, I will drop this 10-page PDF which goes more in depth on the concept and how I use this to get in trades. Now first, I got to show you guys some proof of the method that I am using, supply demand on a 1 minute time frame, really 2 minute time frame, 3 minute time frames where I look for my entries. Also the 1 minute time frame, I still look for entries, but I'm gonna be showing you guys my Discord of what we actually did for a trade that I called out actually today at the time of me recording this video. All right, so here's the trade I end up calling, which is the gold trade. I basically said once we hit TP1, make sure you move your stop loss to either break even, or you take profit or partial profit. And I'm gonna explain that in a little bit. But this was a trade that we end up calling out, and then afterwards we end up smashing those TPs. I actually end up calling out another trade as well. The first trade we end up break even with that for anybody that was looking to ride to TP3, which was here. So we end up making TP1 and TP2, and then after that we had a break even trade, which is this concept, this trade right here. So this was the actual trade. We end up hitting TP2, but it did not close out in TP3, so that ended up being a break even trade if for people that was in the VIP wanted to ride that trade. Now here I called out another trade for gold. I basically said TP1, TP2. Once we hit TP1 again, we're going to move our stop loss to break even. And then as you guys see, TP1, TP2 got smashed immediately, and then we started to get a little pullback, and I'm gonna show you guys what that end result looked like. All right, so here you have it. This is the trade that we got into. We actually smashed TP2, which was right here, and then after that we kind of just went up, which basically put us at break even for those that was looking to ride it down here. However, earlier this morning I did see another opportunity for another sell. So I believe when you guys seen earlier how I showed you TP1 and TP2 was smashed pretty much over here, this is where I basically said let's move our stop loss to now break even. I usually always say within TP1 or TP2 move your stop loss to break even. So we end up basically doing that and then crushing a nice 1 2 3 RR. And right now I am currently on a 2 minute time frame. I know you guys can't see it, but like I said, we're going to explain how to look for supply demand on the 2 minute, 1 minute. As you see, this actually is what I like to call my supply level. It came right back in my supply level right when I seen that is right when I enter. So I enter off of this candle right here. I actually didn't wait on it to close just because I would have honestly took my trade right in the close of this candle, but I wasn't at my computer, it was by my phone. So, and when I caught it out, it was actually, I caught it out around here. So I caught that trade around here, and I was like, oh, look at that, guys, let's go ahead and take this to my bigger demand level, which I call on a higher scale. So I'm gonna be showing you guys how I implement these time frames to get that perfect like 1 to 3. You can look for 1 to 3s within a 1 minute, 2 minute time frame, and so forth. Okay, so what is the 3-man standing concept? This is a concept that I use a lot in trading. Basically, if you've been following me from the beginning, I have been telling you guys how I trade is very simple. I use structure, I use Fibonacci, and price. Within me saying I use Fibonacci, I mainly focus on Elliott wave format by using Fibonacci play. So what I mean exactly is I look for a simple pattern called an ABC, right? And what the ABC pattern essentially is an Elliott wave format of what we call a corrective pattern. Now, ABC patterns can be seen as a zigzag, which I talk a lot about to my students on how a zigzag is seen, which I'm abbreviated here. In the A leg, you get 5 waves. Inside the B leg, you get 3 waves. Inside the C leg, you get 5 waves. I talk about that. Also, sometimes with the ABC pattern, it can also look like a flat, which also can look like a range. Inside of that, you get what we call either a 3-wave in the A, a 3-wave in the B, and then a 5-wave in the C, which now becomes what we call an expanding flat, which is like this. Now for my smart money concept traders, if let's say that you don't care for this, or anybody that looks at liquidation, you will also say liquidity grab right here. You would be like, this area is my liquidity. We grab that by creating what we call a sell stop and then price shot down. Same exact way I look at it for Elliott wave. Nothing changes at all. Nothing changes at all. It's still the same way. So me taking this whole concept, I basically created a way for me to look at the market just easy, like an easier way to identify these reactions. Now when you guys look into this type of method, you can use this on any time frame, but I'm gonna be showing you how I use it. What I then do is, I know with the big three, you basically have what I call the big three, right? We look at Elliott wave theory and we look at Wyckoff theory. Wyckoff theory goes into schematics, it goes into price cycles, which I'll show you guys here. So the Wyckoff theory goes into infinite cycle. An infinite cycle is where you see accumulation in the bottom, which is known as demand. Within that accumulation, what happens is demand increase while supply is low. So if people are basically wanting this but you don't have enough inventory, what will happen is that will rise up to now being a distribution area where that is now considered oversold in retail eyes or any other eyes. If you look at the RSI, and the accumulation area is considered the overbought area. So the distribution area, like I said, is the overbought area. This is now considered supply, which basically means supply will increase while the demand is low. So you have a lot of inventory but you don't have a lot of people buying your product. That's basically what that whole concept comes in, supply demand. And then what happens is price needs to then now go back down to where it can reach more demand and less supply. And then that's where this whole cycle of Wyckoff comes in play, where you start seeing this infinite cycle. Now that is what that's part of the big three concept, right? And supply demand. And I take this little concept, which might sound very complex to a lot of you guys, may not, but I take this same concept and I implement it in the trading world, and I just make it very simple. My goal to you guys is to make things as simple as possible. When I talk to my students, I give them as much details as I can so they can understand from A to Z. I'm still giving you guys gems. Of course, if you're not even in the community or in the mentorships or anything, I'm still giving you guys fire gems, as I always do and always will do. But what I'm getting at is, at the end of the day, I'm just trying to make this as basic as possible for y'all to understand. So now that you understand the Wyckoff part, what happens is you get 5 waves inside of an impulsive wave. I have a video on Elliott wave. I have more videos I will be dropping. I have courses on that and all that, right? But we have a 5-wave cycle. The first wave is our impulsive, which is the trend. The second wave is the correction, which is the pullback. In that pullback, that correction, this is what you will start seeing. You will start seeing manipulation. You will start seeing consolidation. You will just basically see order flows of prices not really going anywhere, creating equal balance. And within that is what we call unbalance, and that's where we start to see unbalance or supply demand and so forth. Wait, before I continue, I want to talk to you about today's sponsor, Margex. Margex is your reliable way of trading Bitcoin by 100x of leverage. Let's say if you ever been in a situation where you brought Bitcoin or you brought Ethereum and you realize the market ain't that great. Well, instead of you losing money while the market is going down, you can actually make money even while the market is going down through Margex with their 100x leverage. Let me show you how it looks in the back end. Now, when you guys have funds and you're ready to start trading with Margex, like I said, Margex is the one-stop shop for crypto trading with up to 100x. You guys are actually able to use their trading platform, which they actually have TradingView already integrated in there. That being said, you come on your left hand side, you guys are able to change your leverage from cross, if you're doing cross leverage, from cross all the way up to 100x. Within seconds. It doesn't take that long to do. Also, you come up top where you see your 0 to 100%. This is the simplest way for you to figure out, hey, I want to put in 25% of my overall account in this trade, or you want to maybe put in something like 5% in this trade. They also have limit orders, so you guys are able to actually do a limit pending order. So let's say that you believe Bitcoin is going to go to 50k, you're able to put a limit order right there to either say it's going to be a buy long or sell short. Now, another thing about Margex is they do not have any hidden fees, so you guys don't have to worry about, oh, am I going to be charged with a commission, or oh, am I going to be charged with a spread, or oh, am I going to be charged with something else. You guys do not have to worry about that. Everything on here is not hidden, and whatever you put in, you can literally double that amount and make that amount and withdraw that into your actual Coinbase wallet or whatever other wallet you guys use. Now, like I said, said, if you guys are interested in signing up, you can use my promo code. You come up top where you see wallet after you sign up, of course, and then you come right over here to use promo code, and you select that and you enter your promo code. Once you have that, you're able to deposit funds, and then they will go ahead and give you that bonus promo code. Otherwise, guys, let's go ahead and get back to the fire gems. So after that cycle is done, we get wave 3, which is here. After wave 3, we get another correction, which is wave 4, and then wave 5 is the final impulsive. Now, after the final impulsive, which I have in that PDF, I talk about how to find these 5 waves so you will know when it's done, the trend. But after the impulsive is done, I then now just simply wait on market to pull back. In this pullback, I want to see if market can react off of the supply levels. Now, the supply levels, you will usually get these off of the wave 4 and wave 2, which is the correction of the impulsive. These are usually where you see the supply demand levels, and I'll show you guys a little bit more when we get into live charts, but that's usually where you see the supply demand levels. So if I'm looking at this in a 15-minute and then I go on a 2-minute and start looking for the corrections, this is where, or even a 1-minute, this is where I'll get these supply levels. 1 minute. Now after that, all I simply do is wait on my 3 confirmations. My 3 confirmations will either be an ending diagonal, a price action pattern, or the Wyckoff schematic. That's all I look for to hit in any of these demand or supply levels. We're looking at it as far as demand, but really accumulation, right, which is demand. But we're looking at this and we're considering that I want to see that reaction. If I get that reaction, that's where my bias is telling me now I can buy it. Now, what I then do is I buy it to that high, right, which is the end of that wave 5. Another thing that I also do is I take my Fibonacci. I draw it from the beginning of the impulsive trend to the end of the impulsive trend, which a lot of people will say validation or the valid area, but I draw it from the highest to the lowest or the lowest to the highest. And wherever I see my other retracement field points, this is where point of interest is usually going to target for Fibonacci by using Fibonacci. So I even add on more TP levels, which would be this and this. And then now we can be looking at maybe a 1 in 15 possibly. So that's usually how it works, right? That's usually how it works, and that's how it plays. So for instance, this is like my TP1 would be here. Once TP1 gets hit, after it breaks this high, that can basically tell me that, oh, we should be heading up now. I would then start to have TP2 would be this field point. However, I don't just put at these field points. I always look left to see if there's other supply and demand levels within these field points. If you guys haven't watched any of my videos on the Fibonacci, and I always say, in order to find, and this is not going to always be perfect, right? But in order to find really valid point of interest, demand supply levels, it will be within these 2 field points. So you want to try to find those 2 levels, because that's what market will most likely react off. And sometimes it might still react, do a little consolidation and then head up, or reaccumulation and then head up. So we want to make sure that we understand if we can find the hot zones of the field play, then we can find the hot zones of the supply demand. All right, so now that you guys understand that, TP3 will be the final Fibonacci point as well. Make sure there's also supply demand in that level. If not, don't take the trade there. Only take it to wherever supply demand is inside of these 2 field points. So now that you guys understand that basic concept, let me show you how this will look in a live chart. All right, so you guys see here how we had a impulsive wave, 5-wave cycle in here, right? I'm not going to talk too much about it, but we had a 5-wave cycle with an ending diagonal right here. So this is what got me to call this out. Well, I didn't call this one out in VIP, but I took this opportunity because I seen the ending diagonal. We also came to a 15-minute supply level, a refined supply level, or demand level, sorry. And basically that's what got me to get in this one. What I then went ahead and did was I seen how we had all of this impulsive wave. So what I went ahead and did was I usually, whatever time frame you are on, guys, and I'm not going to give you like, oh, you should only look for this in this time frame. Whatever time frame you are marking up your charts, you just want to head to a lower time frame to look for the imbalance, or not necessarily imbalance, but look for the what we call the reaccumulation or the redistribution, which is the correction. All right, the pullbacks, the retracements. So if we go on the 5-minute, you see how on the 5-minute I was able to find imbalance right here. Within that imbalance, we had a correction, which is what we call a wave inside of Elliott wave. Also, another correction we had was right here, and another correction we had was right here. So all the 3 of these levels, I usually like to get 2, 3, but I'm not saying, oh, you should only have 2, 3. You just want to at least find supply demand levels inside of the impulsive wave. Now, I do have a video on how to use the Fibonacci to get more accurate information, but it doesn't necessarily mean that's 100% right? But you're just going to have more, let's say, more probabilities on knowing that this is the level it could hit. Simple. So I seen this as imbalance. I now have said, well, I want to buy after this in the diagonal that we got. After this in the diagonal, I want to buy into somewhere around this imbalance, which it did. I'll wait on 3 confirmations, either Wyckoff schematic, price action pattern, which I talk about too in my YouTube, and I'll talk about also Elliott wave pattern in the diagonal. Right here, what we got was a head and shoulders formation and a Wyckoff schematic play. I simply said, all right, once I seen that, we head to the 2 minute, and that's where I enter. 1 minute, 2 minutes, same exact thing, don't matter. But we head to the 1 minute. I look for a supply within the next impulsive, which is this right here. There's 5 waves in here. If we were to go into like the 15-second, 30-second, there's 5 waves in here. Guys, I've been talking about this from day one on. You can spot Elliott wave on every time frame. It's like a mirror effect. Whatever time frame you're on now, you're going to see it in a smaller scale. You're going to see it in a smaller scale. You're going to see it in a smaller scale. It's the same exact thing. You're looking at order flows. Order flows. You're not looking at no crossover moving average. You're not looking at none of that. You're looking at order flows. So you're going to constantly see the same reaction. Also, you have an ABC pattern, which is how I trade. I talk this all the time to my students. I trade the beginning of the C leg. A lot of people ask me, how do you know the beginning of the C leg? When do you know the beginning of the C leg? That is what I'm teaching now in this video, called the 3-man standing method. So we look for the impulsive, and inside of this, we can find supply and demand levels. Once we find those levels, we can then now take our entry. I end up taking the entry here because I noticed this was another supply level, right? So my stop loss was up here originally. I know it's down because this is what I like to call a break-even trade in my eyes. But the stop loss was somewhere up here. We was looking for a simple. We got a 1 or 2 trade, but I was still looking for like a 1 to 4. But we didn't get that off this trade. So what ended up happening was, right when market broke and hit TP1, once market hits TP1, which is basically this low here, once market hits this low, this is TP1, I then now move my stop loss to break even. Once I move my stop loss to break even, I just wait to see what happens. Or I take all profit or partial profit. Usually I want to ride the trade all the way out, so I would just keep the trade and just move my stop loss to break even or a little profit. And then, you know, unfortunately, what ended up happening was we hit TP2, which I actually did take partial at this time because I usually get in multiple trades, and I'll take some trades out just to be cool and still make money. I'd rather make money than not make money, but do it the smart way, which is me moving my stop loss to break even with my other trades so I don't lose that money that I just made. So I basically took that and we went left. All right, cool. Basically what ended up happening was we now came to somewhat of another area of supply and demand, but which was over here, right? And this is where we got a in a diagonal. Now I didn't catch this play. I didn't even realize this was an in a diagonal until afterwards. So I simply said, all right, well, since we got an impulsive wave now, which is all it is, where is my next supply demand level? Right here. So I drew my supply demand level. Once I drew that supply demand level, I wait on price to come in there. Like I said earlier, I could have entered here, but I missed out on it. I got in roughly around here, right? And then we said we're going to have our first TP would be, I believe it was here, and then our second TP was here. Yeah, I said once we hit first TP, because this is the lowest point, we can then now ride it to the next TP level, which is this daily, more not a daily, but a 15-minute supply level. So I know that this might sound like a lot of information to a lot of people, but once again, guys, subscribe to my YouTube channel, because in my YouTube channel we're going to talk more about this. Also, if you want to tune in with our Discord community, mentorships that we do, courses and all that, links are down below. You can sign up, get started. Otherwise, guys, I appreciate the love and support. Once again, make sure you guys subscribe to my YouTube channel and get us 500 likes, and we will go ahead and implement and give you guys that PDF, which is a 10-page PDF. All right. Otherwise, peace and love. See you guys in my next video.